Thank you for having me, you guys. I hope you've been learning a lot so far throughout today. So, what I'm going to share with you guys today is one of my favorite strategies. And what makes this strategy so great is that it's something that newer traders or traders that are struggling can focus on to help them build confidence in their trading and in the markets in general. And what's nice about it is that if you are a stock trader, or a futures trader or a forex trader, it doesn't matter, you guys. Every single market that you like to trade and every time frame that you like to trade on, you're going to be able to take this and apply it to that market. So without further ado, let's dive on in here. So what makes a low risk trade? You guys, when you're thinking of a low risk trade, what do you think of? Go ahead and use that questions box to post because I love interacting with you guys throughout the sessions when I have time to. So what do you think makes a low risk trade? Small stops. That's a big one. Yeah. You want how much your gains are going to be substantially larger than your stops on average. That way you can take a series of stops if you have to. Ideally, you won't take a lot, but you're going to have a really good return compared to it. Higher win rate. So yeah, you've got two things at play here. You've got how much are you going to gain compared to a stop, and you also have how often are you going to have a winning trade compared to a losing trade. So those are two different aspects of it, and both of them are why we're focusing upon this particular strategy. So risk to reward, obviously, very, very important when we're looking at that. Now, when I look at strategies, you guys, I'm looking at something where if you're looking at like a concept of like a bull flag, right? This is a concept all of you are probably very familiar with, bull flag. You're just looking for a pullback in an uptrend. What makes a pullback a strong setup in one situation versus why does it trigger and fail in another situation? It's not always as straightforward as just a pullback in an uptrend. There's going to be pros and cons to every single strategy. So you can actually break down strategies like bull flags into different components, such as their trend placement, where that pattern is taking place in a larger trend. You can break it down according to momentum, meaning how quickly or how slowly is that pullback forming compared to average? What's that shift like? How does it compare to the upside move? These are all things that you have to take in mind and are going to impact whether that trade is a success. Time development. This is something a lot of traders totally overlook. How long has that pullback or correction taken to develop? Because it's actually very, very important. So if you're looking at a pullback of 30 minutes in an intraday trend, is that enough to sustain an upside move? I was actually talking, I do a session on Fridays. It's called Forward Focus, where we look at what's going on in the overall market and looking ahead. And one of my traders asked me about a zone of congestion that was forming. And I said, you know what? We're probably going to go back and forth here for a while before we get that breakout going because the time development's not quite there. And I'm actually going to use that here in an example of today so that you can see it because this is something that we saw live going on exactly as it was happening. And I want you to understand what time development means. This is going to help keep you out of an early setup, and it's also going to help you avoid something that should have gone already, but still hasn't gone. The next thing that you can look at is volume. So if you're looking at like a basic congestion, looking for a continuation move in the direction of the trend, or kicking off a brand new trend, volume dropping is going to help you out because it's going to show you that that pullback or correction really isn't exciting a lot of people on the downside. It's not making people panic. So these are just some very basic traits, and combine them with support and resistance. As long as you understand how those trades work together, they can help give you a very high probability setup. So what I want to share with you guys today is one of my favorite strategies, and I call it a phoenix. And the reason I call it a phoenix is that it is the very first continuation of a brand new trend. So what this can mean is that we can be looking at a pattern that is coming out of a very long zone of congestion where the market has been hemming and hawing and going back and forth for quite a while and is finally wanting to pick a direction for a breakout. Another place that we can find this pattern developing is in a larger downtrend. So the market could be coming and pulling lower, exhausting a trend to the downside, and then we start to see a shift. And that begins our Phoenix setup. Now, the Phoenix is basically just the first pattern that looks kind of like a bull flag, but you don't have an uptrend fully established yet. So you're just starting out with an uptrend. Now, you might have a bigger uptrend way over here, that's pulling up, and then it goes into the zone of congestion with the Phoenix at the end of the zone of congestion, but it's just kicking off a brand new uptrend. So the Phoenix is also the right shoulder of an inverse head and shoulders. It's also the handle of a cup with handle. So these are other pattern terminology that you might be very familiar with. But what we're looking at are the details in that correction. Why does a certain handle in one cup with handle work very, very well and lead to a brand new strong uptrend versus why might it pop and fail in another situation? So when we look at the details in a Phoenix, what I'm looking for is, again, a longer trading range here or a downtrend, preferably with rounded lows. So you can see here we've got some slightly lower lows forming on this template. Then I want to see 2 upside moves. And I want these to be average, maybe slightly slower than average. If it's extreme, boom, straight up, that can be problematic. So it might be straight up and then just a little teeny tiny pause there in the middle. That can be problematic. And that has to do with momentum. Because if we are looking at a move coming off of the lows here, if this is average, maybe even slightly lower than average, when this pulls back, we want to see momentum shifting. So we want the upside momentum here to then shift with the pullback so that that's slower. And if this upside momentum is average to slightly slower than average, what happens is that this can have a strong breakout move. If, however, that upside off of the lows is really steep and then you get your two-way pullback, what can happen is that a lot of the momentum will have already been pulled out over here. So when it tries to break, it's harder to get a really full, quick breakout coming out of that trading channel or that correction. So when we're looking at momentum, you want to see overall a slower pullback. And ideally, these corrections as a whole will be average to slower than average momentum as well, meaning that when you're comparing them to previous moves, you have a slower move on those pullbacks, and that's going to help give you a stronger breakout. So other things in this template are, as this correction forms here, you guys, we want to see volume dropping. I don't have that marked on the template itself, but it's something you can go and grab a screenshot and add it. So you'll see lighter volume in this first portion, then you might see a little bit of an uptick in volume here in the middle, and then you'll see even lighter volume here. So it will almost look like these V patterns when you're looking at volume at the bottom of your screen. You'll have it going like this, and then you'll have it going like this. And overall, it's going to be a volume drop throughout that entire correction. And by doing that and getting to some of the lightest volume over here, we can really nail down our entry triggers. Now, traditionally, a lot of traders, they're taught to take a breakout when a channel break happens like this. So basically it's marked as entry number 2 here. What I try to teach you guys is to use that second pullback and the channel break of that as your entry trigger. But here's the thing you've got to watch. So see this pullback here? If we look at the distance between these highs, notice that if this is 30 minutes between high 1 and 2, I would want to see this come into a spot where when it breaks that overall channel, it's about another 30 minutes so that the overall correction here lasts about 60 minutes. If it tries to go early, you guys, like at 15 minutes or 45 if you're looking at the whole thing, that can create a trap. So what can happen is you might have a little pop here, breaks above here, pulls back again, can break that low. So you might get this megaphone formation forming before it goes. And when we're looking at a stop level, we want to stop under that second low within this pullback or congestion. So if you're looking at something that pops too early, what can happen is your stop can be too tight. So it's easier to get flushed out. And I didn't mention this earlier, but ideally we want to see 2 waves up and then the 2-way pullback. So 2-way pullback will help you with getting a very, what I would call a traditional, I labeled this pattern like, I don't know, 20 years or so ago. So traditional for me, right? So what we want to see is that 2-way pullback there. But what's interesting is that we can get many different variations of how this congestion forms. And I'll still call it a phoenix because it will be the first correction in what starts as a new trend. So sometimes you'll get your 2-way pullback, but maybe that second pullback is too strong. So it can shift and you might get a smaller phoenix here that can be part of an inverse head and shoulders. So you might get a smaller phoenix within the bigger phoenix. And that can happen as well. I'm going to show you guys some examples of that here as we go forward. So ideally, you can get that entry right there, your stop's right here, and you've got a really tight stop because the target level that I'm looking for is this entire move up here as a measured move over here. So it is not uncommon, you guys, to get 5 or 6 times what you're risking. And the beautiful thing about this strategy is that when you use it with all of these building blocks, your probability of success is over 80%. So you got an 80% chance of success or more, especially if your trends development and your larger time frames are in your favor. Then you also have higher return compared to your risk. So you're looking at much larger return levels compared to your risk as well. But you need all of these building blocks to line up. So what we need is average to slower than average pull higher here. Even slower correction here. Again, coming in, and this can be a bigger trading channel here, or it can be coming down and rounding off at lows. And in this too, another thing to watch for is if you look at this upside move here, ideally this pullback will be 1 to 2 times what that upside move is. So if this upside move is 30 minutes, your correction here will be 30 minutes to an hour. So take notes, you guys. I hope you're taking notes on this, right? So that is going to help out. If you use Fibonacci fans, that's another thing that can help you out. So if you go from the low to the high here with your Fibonacci fan, and this lines up with a 50% or a 61.8% Fibonacci fan level, your trigger zone is going to be that 76.4% fan. So that's going to help you with timing and help prevent you from being too early or too late. Because if it doesn't trigger at that 76.4, that can tell you that your base is going out too long. So there's a lot of details that go into this pattern. And it's not just, hey, you see a pullback into like a 20 period moving average, that's going to be a great buy. Or in the case of a Phoenix, a lot of times it will be hugging one of those moving averages. So it could be hugging like the 20 period or the 40 period or the 50 period simple moving average, where your average moving average is down here, it pulls up, and then it plays along that moving average before it tries to break higher. So support and resistance come into play in that regard too. If you've got a downtrend here and you've got this coming back and forth, that could be hugging that upper trading channel in there. And that's where your Phoenix is forming. So all of those are going to be things to watch for with this pattern. And if you have those all in play, your odds of hitting at least 1-to-1 are 80% or higher. But if this is a major trend exhaustion or support level, this has a very high probability of kicking off an entirely brand new trend, you guys. So not just stopping at that 100% extension, but continuing to go even past there. And that's why this is a really good pattern. Carla, I have a lot of charts to show you. So let me show you, without further ado, some of my trades as well as those of my other traders, because I want you guys to realize that this isn't just something that, I've done myself, but it's also something you can take and you can do yourself. So that is very, very important. So here, this is one of my trades. So here's the template over here that I just gave you guys. And what you're going to see is that as we go through these, not all of the live trades are perfect according to the template. But the great thing about this pattern is that there's a little bit of give. Things don't have to be perfect as long as you have most of the aspects lining up. Now look over here on this template. I've got this two-way pullback to a slightly lower low going on over here. And this template was designed years and years and years and years and years ago, you guys. And it is still very, very valid to this day. So I gave this class a couple of weeks ago as well. And this is one of the trades that I had that very day. It had that shift to the lower low then, and it had a pop. Now, what's interesting about this here is that you'll notice that if you look at the template, that setup would be down in here. So this is just a very baby Phoenix that can go and then create a bigger Phoenix. So we can get this pattern not only happening on the smaller time frames, but then also going and developing on bigger time frames as well to keep the trend going. So in this template, this little baby Phoenix would be down in here. So I used that shift in momentum here to help me trigger that bigger break and that bigger trend move. And in this case, I don't have a smaller channel break. I only have that larger channel break as an entry. But because I have the bigger momentum shifting here, and even in this last portion, see how it holds that upper channel like I was talking about? That's going to give you a great entry. And then you can go and build into the trade on a bigger setup for a larger continuation. Let me show you guys. So here is kind of a bit of a closer look at this. It shows some of the time development aspects of this. And in this case, the time development refers to these previous zones of congestion. So if you have something, your Phoenix is in inverse head and shoulders, you want that Phoenix portion here to be about the same amount of time as some of these other corrections. So that's another aspect that can help you out. Now, if you look at the details of this Phoenix itself, it's not as close to template. But what it has is that it has the fact that it is hugging this upper channel. We've got two main waves of correction. In this case, the second correction has two waves, but notice this high is higher than here. So you've got one lower high, got a higher high, and then it comes to a lower high. So lower low, sorry, you guys. And so what you have is two main lows and then a middle one. So the two corrections are actually this pullback here and then this pullback here. So in this case, the larger channel break and then that smaller channel break, they're right at the same spot. Now, what you'll notice here is this big steep leg up here. In a phoenix that is just a general phoenix taking place by itself, you guys, that's actually a con. Because what it can do is it can create a slower breakout, which you can see is happening over here. But the reason this didn't end up being something that mattered too much on that particular trade is because of the trend placement, where this trade happened on a bigger trend. This was a major pivot low. There was a zone of congestion. So basically it looked like this, and the Phoenix was like right here. And there was all of this congestion back in here. So this was coming down in a bigger trend into support over here. And on the larger time frame, you couldn't even see the Phoenix. It's just that it had all of this support over here. And then it went and formed a bigger Phoenix here. So if you have other things like trend placement in your favor, some of the things that might be a con and not a pro won't matter quite as much. This just happened to be a trade that was the day that I gave that class. But I'm going to show you guys some going forward that were from yesterday too. So let me kind of go forward here on this. And this is a little bit more traditional. So notice what you have here is that we have a smaller little Phoenix here with the volume dropping and it's coming out of a trading range. Kyle asks a great question. Do I normally trade on a 50 tick chart? No. So the reason you see a 50 tick and a 5-second tick here, you guys, is because I was timing a reversal or a breakout on a much bigger time frame, but I was dropping down to the smaller time frames to use to time my entry so that I could get a very, very tight stop. So normally you're not going to see me using these time frames as the main trade time frame. My main trade time frame for an NQ is going to be about an 800, 1500 tick chart is where I'm going to look for trend development and trend placement. And then I'm diving down to smaller and smaller time frames to get those better and better entries. So like the ones with the 50 tick that I was showing you, I was actually looking for a reversal on a bigger time frame. And then the Phoenix is what triggered that reversal for me. So instead of doing like catching a falling knife as something is coming into support, if you look for a shift in momentum like a Phoenix, you're not going to be at that knife point as support and resistance levels hit. You're going to be able to get into a very solid setup as it's starting to turn around. And again, you can trade these as a breakout too. So this is a 5-second chart. That's very, very small. But I use the small time frames also during live classes to teach concepts. So this is something that was happening intraday, and we happened to be studying the Phoenix. So a lot of times I'll use smaller time frames as a study tool. So I teach technical analysis live so that traders get a chance to see as things are actually unfolding. So that's why you'll also see things on some of the smaller time frames too. Plus it was a continuation pattern on a larger time frame. So here, this is where that tiny Phoenix was that I showed you on the 50 tick chart, but this is a 3000 tick chart. So what it had was all this congestion over here, and then it was shifting momentum. And you can see that there's that little shift in momentum. And then the Phoenix, you can't actually even see the Phoenix here because it was so small. But I had all of those other things on the larger time frame going for me. So then as I'm looking for support for a reversal pattern to happen, this is a nice, more gradual pullback after a stronger upside move. I can use a little baby Phoenix to get me into a much bigger trend reversal. So Kyle, you see how that works? So you can't see the Phoenix on this time frame. You've got a little bit of a different version of one over here, but I used the smaller one to get into it. Let me show you guys some of the trades from my traders. So here is one of my traders. This is from yesterday. We were all looking, they're studying Phoenixes as a check mark right now. And what we had is this nice upside move here. And then look at this beautiful two-wave correction, you guys. So this was happening yesterday morning. You can see this is a 300 tick chart. So you can use time frame charts as well as tick charts. You don't have to be focused purely upon tick charts. Again, these happen on every single time frame. Now she doesn't show her volume here, but typically volume is going to be dropping off. Look at the distance between these highs. We have pretty close to the same distance. We have slowing pullback here. And then, you know how I showed you can have those smaller time frames? She took a little baby Phoenix that was on about a 50 tick chart to get her into this bigger Phoenix. You could also have added here. That would be your break in this bigger channel here. Since this move up and then this move up were about the same size, that means that if you were taking a full channel break right there, that's where a lot of traders can get trapped because you've got these two baby impulse waves that are about the same. So sometimes traders will get in right here because they'll be taking a bigger channel break and then they'll end up in negative territory right away. So if you see a smaller pullback or congestion within this, so this has the two main pullbacks here and then it kind of shifts again, you can use that smaller entry trigger to get you into the trade. And then your stop is under here. So if you wait for the channel break, your stop is double that. If you're looking for a measured move as a target level, that can take something that could give you like 6 times your risk and make it down to like 3 times your risk. So meaning you could take twice as many contracts here for the same risk as you would be up here. So a Phoenix is something you can go and drill it down to smaller and smaller time frames. Let me show you guys more examples here. So here's another one. This is another one of my traders. And what you can see here, again, the two-wave move up, the channel shift, and then here was the Phoenix right out of the open. And this is a 20,000 tick chart. So totally different time frame, same pattern. And in that case, he uses moving averages as well. Again, look at the little baby Phoenix on this one. Again, this is a completely different trader here. And these are all trades that these guys took within the last 2 weeks here where they're implementing the strategy. So you have your bigger move up here, the two-wave pullback, then you've got a two-wave here with the shift in momentum, just like on the template. Let me add the template there. So see right here, you got your pullback right here. That's that little extra shift right there that's going on. Pops up, here's the baby Phoenix. Now they're still working on holding on to some of their trades longer, building confidence in it. This is an 800 tick chart. But look at how they got into that very, very cleanly. And then you've got the bigger Phoenix breaking out too in their favor. So they're able to get really, really good return compared to what their risk is. And this is on the ES, so this is the S&P 500. Stop would be under here. So, first level there, because this is kind of a lot of congestion, a lot of back and forth, the first target level, your risk to your reward is about 1-to-1 on there. You're looking at this move up. But when you're looking at it in the context of the bigger move up, there's a lot more potential to go, you guys. And again, these are their trades, you guys. I did not tell them buy here, sell here. I taught them the strategy and they applied it to themselves, their own trades. So here's another one from them here where we've got the two-way pullback. And in this case, you can see they took the entry with the channel break, but they could have actually gotten into this a little bit faster using the smaller two-wave here. as an entry trigger. And then, you know, they're working on holding again, but it shows you how high probability, even if you're not perfect on your exits or not perfect on your entries, you can still go and apply these and then work on building your confidence and getting in on earlier triggers that are within the bigger pattern and then holding for the larger targets. So they still have a really high probability even as they're working on holding. So here's another example. This is in JD. So you actually have a stock trade example here. This is, again, a totally different trader, you guys. And here, it's part of a bigger cup with handle. So within that handle, which the handle is a phoenix itself, within that handle, here's a little baby phoenix right here that's part of this pullback. So you can see a little two wave there. This is where he could have started to build a position. Then he had a bigger phoenix with a two-wave pullback right here. And if you were looking at a volume on here, I can't really see his volume at all, but if you were looking at volume, you would see that volume would be dropping off here and it would be dropping off here again. And here you can see his Fibonacci fans. So that pullback comes into the 61.8% Fibonacci fan, and then they have the 76.4% here as confirmation. You can totally scan for these structures manually. I don't have, you know, any programs that I use to do it like automatically. I just look at my charts and watch for them to develop as the market is coming into major support and resistance levels on bigger time frames. I look for this pattern to start to form. And the key is patience. Patience, you guys. Wait for the time development. See here on that time development on the smaller time frame, the distance between those highs there is about the same. Distance between them on the bigger, about the same. That's going to give you your highest probability. And then he was looking at measured moves as a bigger target level, but also this here, but then he went down and narrowed it down to smaller measured moves. You can see some of his annotations. This is an avalanche right here, and an avalanche is the opposite of a phoenix. So you can take this phoenix pattern here, flip it over, and that's going to give you the opposite pattern. And once you learn the phoenix, you're basically going to learn all different other strategies and patterns by just focusing upon one pattern, because you're going to learn, hey, when can this phoenix go into a bull flag? When is this phoenix really just part of a two-wave correction and a bigger downtrend? You'll learn all of those things just by learning the phoenix. So for example, here you can see where we had the phoenix. In this case, you know, as part of a check mark, you got a two-wave within a bigger one. Got a nice continuation. Then we've got reversal patterns that begin to develop at the highs. So you can often take these patterns to a level where once it gets to target levels, you can go and flip trades too. So it gets to be, you know, really fun as things develop. Now, what I want to share with you guys here today, my offer to you guys is I have a course, a boot camp that I put together. It's 14 hours. And it goes through every phase of a market as it unravels. So it starts with going through those building blocks that I went through very, very quickly here in today's class. But it goes through those over the course of a couple of hours. The tools of the trade is what I call them, or your building blocks of price development. So things like momentum, trend development, you'll learn those in more detail. And in week 2, it goes into trading the trend change, which are patterns like the phoenix and the avalanche. You'll see a lot more examples of that. And then it goes into trades for continuing with trends as trends continue to unfold. And then week 4, these are all on demand, you guys. Week 4 covers pivot trading. So Things like timing, absolute highs and lows. How do you know if it really is a high or a low or a fake high or low and you're just going to be catching a knife? So it shows you those pivot trades. I mean, those are the trades that helped us time like the pivot high back in February going into March perfectly. And as well as, all of them that come forward. So this course is actually a prerequisite for, it's normally $299, but I'm offering it now for you guys for $149. So this is a prerequisite for my League of Traders. And League of Traders is just a semi-private trading club, basically, that I run. And what we do is we meet every single day at noon. Every Monday is Mentor Monday, where we cover one specific topic. It could be a strategy, it could be trader psychology, it could be, a particular tool that we use. This week, for example, we're covering checkmark phoenixes and avalanches. And it just basically all through the week. So you guys get the opportunity to actually see these patterns develop live, look at pros and cons on them as they're developing live. We have a study group for students every Thursday night. So students get together and it's just like a study group in college, sharing notes. This is all Eastern time zone. Everything's recorded and put in onto my website. But I do require everybody to go through this course first, because what it does is it teaches you all of those core aspects. Because once you get into League of Traders, it's kind of like being thrown into a residency program. So there's a lot of advanced stuff that gets covered. So this gives you all of like those core things before you get into it. Some of the other things that are covered in here, you guys, I include Fibonacci Fan for those of you that have NinjaTrader. So you'll get the Fibonacci tools that I use as an indicator, because NinjaTrader doesn't have them built in. You get access to my League of Traders forum. So you don't even have to be in League of Traders yet. You can, let me show you this forum. But you can join the forum where you guys, let me kind of scroll on up here, can chat. You can see they're talking in here. You get to see examples of trades. You get to see them doing their own trades and showing you things that they still have to work on and what they can improve. And I interact with them. They'll ask questions like, hey, what do you think of this? What am I seeing wrong on this, Toni? Why isn't this going when I thought it would go? For example, when we were doing our forward focus yesterday, we were looking at the Nasdaq here. I'm going to go down to smaller time frame. And it was right here. It was just starting right here. And one of our folks asked me, is this going to be a breakout here? And I'm like, no, this needs to go, and it needs to go into a longer range. It's probably going to open up and bounce back and forth. You guys can go watch this on YouTube. I posted this one on my YouTube channel. So you can see that throughout the week, I'm posting live stuff, live analysis. So I'm teaching you guys live here in League of Traders. And look what happened. Lo and behold, went back and forth. And then our traders caught the breakout here. See, it's getting to a point where it's getting ready. Now it's going into a little baby Phoenix here. And then we're getting the bigger breakout. So the baby Phoenix right here, can't quite see it well on the 200 tick, but you can see that this is part of a bigger 1 and 2 wave pullback. And the second pullback again has 2 waves in it. So it's a bigger pullback. And then we even get a little baby Phoenix right here, you guys. That happens right here. So if you missed the earlier one, even though this is a channel break, you wouldn't buy it here. You'd wait for the little baby Phoenix to buy it and add. So we had lots of traders that caught this because this was on Friday and they had the Thursday night study group the night before. So this course, you guys, you can go and pick that up at tonihansen.com/fibsrock. So what it does is it shows you a little bit of Fibonacci as well. And Fibonacci is something I use for new and struggling traders because it just gives extra confirmation. But you're not going to see a ton of indicators, you guys. I don't use a zillion indicators in my charting. I try to keep it very simple so that everybody learns how to read price action, not using a ton of indicators or extra data. You can take things that you've learned from other places and you can apply them. Like some traders love the MACD, for example. You can use any other data out there, but what you have to keep in mind is don't let it be something where you're second guessing yourself. Because if you don't know an indicator inside and out, when to apply it, when to ignore it, you might have a trade trigger and you second guess yourself because your indicator isn't lined up at that point. So I teach traders to read pure price action. And that's something that you can go and you can take to and apply to a time frame chart. You can apply it to a tick chart. You can apply it to every single type of chart that you want. So guys, take advantage of this here. Go to Fibs Rock, ToniHansen.com. One thing that I want to point out to you guys is I don't make any money on my website. And that's something you're not going to find from a lot of the folks out there because I make my money trading, you guys. So the earnings that I get from the website, they go to help pay the admins that run the site and for the programs that I use to keep the site up and running. So you guys know that I am not making anything off of your purchase. It is just helping me educate you guys. And the reason that I do that is because my parents, both teachers, and I learned very early on that I learn better if I'm teaching something. So if I hadn't been teaching my whole career as a trader, I probably still wouldn't be trading. Because what it's made me do is it's made me have to be able to explain every single move that I'm doing. It forced accountability. And that's one of the reasons that I love our Thursday night trading groups, because it is the traders like you that are leading those groups. So you are helping each other learn from each other. So some of my traders that have been studying with me for a much, much longer time, they're leading the study group now and helping you and making them better traders, as well as the participants who are then analyzing their charts and getting input and feedback. And then you've got the forum to get feedback from me as well. And I pop in at all hours of the day and night, you guys. So even like Aussie traders, they'll be like, what are you doing up, Toni? It's like 3 in the morning Eastern. Well, there might have been up insomnia and taking some trades. So it's an opportunity to chat, and it's basically a family. It's our family, you guys, our online trading family. And we don't often have that opportunity in a lot of places because trading can be pretty isolating. So, it's great place. I know I can see some of you guys in here. So without further ado, I'm going to wrap this up and I'm going to head and turn this on over. So you guys enjoy the rest of your weekend, and I look forward to chatting with you in the future. So take care, everyone.
Thank you, Toni. We appreciate you being on Traders Corner. Stay well. Ladies and gentlemen, it has been an information-packed event, and our anchor presenter started his career as a mathematician contracted by the US Navy. His expertise was the optimization of software. He then moved on to teach finance as a professor at Jefferson University. He will be discussing a brand new release, the Money Flow Tracker, the only way to profitably trade stocks, options, futures, and forex. Welcome to Traders Corner, Mark.
Hey, thank you so much. Are my slides projecting okay? Can you